What's up, everybody? Welcome to the August 25th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered to you by Indy Wealth. Today, we're just going to talk about what's going on in the market. So no wasting time today. Let's just get going. So let's start with last week and about how I was kind of wrong. I'm going to be honest with you. I expected little to no fireworks. I thought Chairman Powell would come to Jackson Hole last week and say more of leave his options open and say, hey, we may be cutting because job rate is slowing. We've done our job from that perspective on inflation. We're getting towards where we want it to be. But we still need to monitor tariffs. And he did a little bit of that kind of stuff, but the market took it as a much broader signal that the Fed is ready to start cutting. What's interesting to me, though, I mean, there was an 80% chance that the Fed, the 80% probability listed that the Fed was going to cut anyway. But that number has not changed a lot. I just looked this morning and it actually went down a slight tad. Not terrible. We're still above 80%. So there's still an overwhelming probability that the Fed does cut in September. But what's coming up is what's called PCE, which is the Fed's preferred, I would say their preferred inflation metric. It's the one they probably pay the most attention to with regard to what is going on the cost front. So if that number comes in differently, I still think Chairman Powell gave himself an out in saying, tariffs are still somewhat of an uncertainty with regard to how much those are going to push the cost through. The job market is slowing, but hasn't slowed enough. I mean, there is still an avenue for him and the Fed governors to say, let's hold off for maybe one more month or one more meeting and see and do more data dependent type stuff. There's an out there, but I don't know. It's getting smaller and smaller, and it will certainly surprise the market at this point right now if we don't have a Fed cut in September. So the market reached to all-time highs again last week, at the end of last week. I mean, we kind of went on a little bit of a roller coaster, but the end was very strong from the Friday report. Whether that can sustain or not based upon what we heard, I don't know. I don't know if this is rip roar and rally time. We've kind of been in rip roar and rally time so far. So I don't know if we say it right where we are right now and the Fed cuts in September and says we're going to pay attention to what's going on in the future. This isn't a part of a massive cut cycle. I don't know if this spurs a lot of secondary effect benefit. We'll see. I could be wrong about that. But again, I think it's going to take more than just one Fed cut in a guidance of data dependency to really accelerate this market even further from where we are. Turning to the U.S. government as investor, that's an interesting report that came out last week, is that the U.S. government is now taking a 10% stake in Intel as a result of giving them money for the CHIPS Act and other grants that are out there. This is different. I remember a history where we looked at the U.S. government as an investor of absolute last resort, and even then, not so much, not considered. State-run enterprises and state-oriented enterprises have not historically been favorably looked upon. Especially, we have a Republican administration right now. They historically have been very anti this, free government or government versus enterprise. Let enterprise do their thing. We don't take stakes in government, or we don't take stakes in business. Seems to be changing a little now. We'll see what happens, how many times this occurs. There's no voting stake in Intel. So there's that component of it. But I just worry about what this means going forward, because this is an avenue in taking, in my opinion, and again, I'm not the absolute expert here. I did look at it a little bit, but it doesn't look like, they have voting rights, but it does dilute shareholders to a certain extent. So if you were an owner of Intel before and somebody came in and just bought 10% as a result of contracts that were already kind of in place, there's no cash infusion. There's no anything like that. So didn't you just get diluted by 10%? So I just think it's a slippery slope. I think we need to be careful here. I don't think it's necessarily completely negative and, shut it off and there's no good to be burned of this, but I also think we need to be very, very, very careful about government as an investor in U.S. companies going forward and assigning government contracts based upon their willingness to basically forego some of their company. Turning to the earnings side, the consumer recap. I told you last week that we had Walmart, Target, Home Depot, and Lowe's last week. Really, my recap on that is consumer slowing, not stopping, and pivoting. That's what it looked like the most, is that discretionary items were starting to slow down. And on the home improvement side, people aren't doing massive projects, but they're buying appliances. They're doing the small oriented projects within there. I think that has an interesting ramification towards what we've been talking about with regard to tariffs and inflation. Is, again, these don't live in a bubble, right? Is the tariffs and inflation all live within the consumer spending habits. So if the consumer is pivoting their spending all while this is happening, it makes for a big soup, right? I mean, it's a stew of the US economy. That's why you can never say, example, tariffs automatically inflationary. They tend to be inflationary, but if the consumer starts pivoting towards other goods and services or just other behaving differently, it may not show in the inflation numbers. So that's why we always have to be a little bit careful about saying this will lead to this. The US economy is just a very broad, there's a lot of different waves and a lot of different sources. So from that, you have to understand that sometimes consumer benefit or consumer behavior can change what that looks like and that trajectory looks like. And I think we're witnessing some of that right now. Earnings reports, again, generally were fine for the companies that were held. There were a couple of disappointments, but not aggressive disappointments. But overall, I think the consumer is starting to do more value spend rather than accelerating their risk profiles. That's just in general. I mean, everybody can be a little different on an individual basis, but on an aggregate basis, they're starting to bring down their spend into more non-discretionary items and lower spend quality on the home improvement side. The big dog is reporting this week. NVDA is coming up. We'll be watching it for anything AI oriented, to be completely honest, for any change in spend and for these recent issues that have popped up with NVIDIA in China. So we're going to be looking for that kind of stuff. More of the commentary again. We do own NVIDIA in our Indy stock model. It's a company that we believe, again, has flown to the biggest company in the world, but also earnings have gone up just aggressively from where they were 3, 4, 5 years ago. So it's not an extraordinarily expensive company. It's an expensive company, but it's not extraordinarily expensive. And especially for the earnings growth, which is far exceeding anything else you would get in the S&P for the most part, certainly the S&P in aggregate, and one of the top growers in the market overall. So it is very interesting when the biggest company in the world is also one of the fastest growing. But that's one of the things we're dealing with right now, and that's why we still own NVIDIA here at Indy Stock. Lastly, headed to the State Fair today. We're going to go check it out. If you've never been to the Minnesota State Fair, it's one of the things we do pretty well here. It's a fun experience. It's huge. There is food. If you're into gluttony and farming, you will be at your peak. And then thirdly, if you are into people watching it all, it is excellent times from that perspective as well. So headed to the fair with the family today. We're going to have a good time. We're going to eat some food. I'm going to gain probably 23 to 25 pounds, somewhere around there, because I go pure glutton at there, and I am not holding back today. So until then, I'm going to go enjoy myself at the State Fair, but you all have a good week, and we'll see you next week when we have our next hot button topic. Until then, take care. Thank you.